Hello subscribers, today is Friday, April 29th, 2022, and this is a market recap for MasterChartsTrading.com. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Only these actions is what keeps this channel going. Thank you. Large cap stocks have most likely entered the bear market, and small caps actually made a new lower low, so both of these are definitions of bear markets and downtrend. High yield bonds also extremely weak and made 2-year low. This is bad for stocks because of correlations. I'll show you what I mean. Since we are most likely in a bear market, we are now going to be thinking about selling the stocks short or buying puts. So I'll show you an example of how to do this for General Electric. Dollar run may be finally coming to an end. This should help precious metals. And Bitcoin broke critical support and could collapse. If you are a subscriber, then stay tuned. We're going to cover lots of different stocks and securities: crude oil, natural gas, real estate, Switzerland, Amazon, Caterpillar, gold miners, Barrick Gold, Hasbro. This is probably a short candidate. I'll show you if you are a subscriber. If you're not a subscriber, consider signing up at MasterChartsTrading.com. Alright, so we're looking right now at S&P 500 futures on TradingView.com. This is TradingView.com interface. The symbol is ES1 exclamation point. This shows futures with about 15 minutes delay. If you want the actual futures as is happening right now, then you can look for this symbol, SPX 500 USD. This is contract for difference, not tradable in the United States. However, it is available, so you can use it, especially if you like to trade on intraday charts. So let's look at 5-minute charts of today. Notice this. So 5-minute chart, what does that mean? 5-minute means that each of these candlesticks, each of these green or red candlesticks are 5 minutes worth of activity. So let's say in the morning you wake up, this is California time, 6 in the morning here, and you're like, oh wow, looks like the stock in this S&P 500 has closed below this red support resistance line. So first of all, what are these lines? So these lines are available on MasterChartsTrading.com. They're called Master Charts Trading Price Action Indicators. And they show you basically levels of where you want to buy, where you want to sell. And if on intraday chart we close below this red line, we sell it short right away. So there's for example, opportunity. Now the stop would have been above the blue line. It was never hit, and you actually had a couple more opportunities. For example, right there at 7 in the morning California time here, and you had a tremendous run if you held it throughout the day until the close. It's a 3% gain. If you bought puts, you can buy puts on S&P 500 ETF SPY. So you can't really trade this security, SPX 500 USD. However, you can buy puts, or you can buy calls. So let's say you are here in the morning and you're like, oh wow, let's sell it short. I'm gonna buy puts. I'm gonna express my bearish bias, and I would have been super correct. Let's say I bought puts 2 weeks out, a 3% gain on the security, underlying security, would most likely translate to like 100 to 200% if you bought, let's say, a 2 weeks out short-term option. So they moved tremendously. So this is how you can do intraday or day trading. Now, do not use this technique for the actual S&P 500 ETF SPY, because there are gaps. See, there's a gap right there between yesterday and today, and this would have been this screws up the indicators, so do not use it. So you need to use the underlying security. But looking at daily charts, so daily chart for S&P 500, bear market today. So bear market starts April 29th. That's today. And I was waiting for the stock market to close basically before I can declare this, but today is the day, because here on the 26th of April we touched that level, but we didn't close below it. But today we definitely closed below it. So no ifs or buts about it. We are now in a bear market. So bear market implies downtrend. So S&P 500 or other big indexes will now most likely trend to the downside. Where may see a bounce. We could also just just gap down on Monday, continue lower. I have the 6.0 version of the indicators. They can project forward. They can project the indicators forward. Now they're still sort of experimental, but notice the red line is kind of curving up a little bit. So what I'm predicting is most likely something like this. So somewhere into May we're going to be rising, but we're going to be rising within a bigger downtrend. So if we get there, I would be shorting it. I would be thinking about selling it short. Haven't gotten there yet, so let's stay tuned. Okay, so looking at NASDAQ. Here's NASDAQ, entered bear market even earlier, right there on 8th of March. Big bounce, and if you're an aggressive trader right there, you could sell it short. Signal was on 8th of April, and you would have been super correct. And now new lows, lower lows. So we see in lower lows, lower highs. Again, a definition of a downtrend. Can we bounce? Yeah, we can bounce. We're also in a downtrend. So once again, if we bounce, we're going to be bouncing within a bigger downtrend. And that, to me, implies we want to be thinking about shorting. We do not want to be thinking about buying. Looking at Dow Jones. So Dow Jones futures haven't. Well, actually, let's look at the contract for difference. I'm going to look at contract for difference for Dow Jones, and the symbol for contract for difference for Dow Jones is US 30. You can find it on TradingView. And let's look at daily chart. Again, 1 day's worth of activity. So right this instant we're still trying to playing around this yellow line. Basically we're very close to bear market, but I think that if S&P has closed below the yellow support resistance line, which means bear market for me, I am going to give bears the benefit of a doubt at this point. Dow Jones, yeah, it's a nice index, but S&P is more important. So most likely we're already in a bear market for all major indexes, and again that would imply I do not want to be buying stocks. I want to be thinking about selling them short on a bounce. Okay, so Dow Jones, same thing. So yeah, most likely we're going to continue lower together with S&P. And of course the biggest loser is the Russell 2000 Small Caps Index. That one actually entered bear market even earlier in 18th of January, where I'm hovering. Why? How do I know? It closed below the yellow support resistance line, which you can find out more in the description. And then that's all I need to know, really. I don't know anything about anything of, I don't really follow various fundamental indicators like earnings. Do earnings really matter? Why don't you make a comment? All we need to know is what's price doing, and the price clearly confirmed bear right there, 18th of January, and then bounce. So again, this is how we would have traded it. It made a close below the yellow line, wait until it touches the red line, sell it short. Again, nice move lower, bounce, and then again it touches the red line. Excuse me, I have a cold. and sell it short and close below the red line. So again, new lows. Not only that, we made another lower low. So we were making lower highs, lower lows, lower highs, lower lows. So today again we made a lower low. This is really bad for stocks. Implies a downtrend. Junk debt, small, or rather high yield bonds, unraveled back in January. There is an entry into bear market January 18, 2022 of this year. Look how weak it is. It bounces a little bit, but it never even reaches the red line. It just kind of weakly bounces and sells off. Again, right there, the highest it got on 29th of March. It's just close to the red line, but never even got to it. And then made a new low with a vengeance. Why do I care about junk debt? So looking at weekly chart, so each candlestick here is 1 week's worth of activity. Excuse me, I'm gonna use a different this one right here. This is a weekly chart. So 1 week, the interval is 1 week. Each candlestick is 1 week's worth of activity. This is 2-year low for junk debt. Big deal. Why do I care? So looking at this indicator here, this is correlation coefficient. So it's correlation to the S&P 500. How much does junk debt move together with S&P 500? By and large, it does the same thing. If we zoom out, multiple years, we can see that overall, vast majority of the time, junk debt does the same thing as stocks. So, that's where that's why I'm so worried about junk debt leading the stock market lower. And in fact, that is what exactly is happening right this instant. We're seeing junk debt continue lower and S&P 500 continue lower with it. Why that is happening is not my domain, but I'm looking at the chart and I'm looking at intermarket relationships. So intermarket meaning what's junk debt doing together with S&P? That's intermarket relationship. So looking at those relationships, we're seeing lower lows, lower highs, and a bear market for stocks. Since we're looking at the bear market for stocks, I wanted to show how I would trade stocks on the downside. So this is General Electric. This is stock of General Electric, symbol G. Notice again, this is a daily chart. So daily chart means each candlestick is 1 day's worth of activity. I don't want to trade it on 1 minute chart or anything of that nature. Let's say 5 minute chart. So the reason being is because gaps. You see, there's a gap. So this is from 25th of April till 26th of April, big gap down. This messes up the indicators. So you do not want to do that. You want to go on daily chart for stocks. So this is how we trade stocks on the downside. First of all, we need to see, did the stock enter a bear market? Yes. Right there where I'm hovering on 26th of January, the stock has closed below this yellow support resistance line. These lines are available. Just send me a message. Then we wait for a bounce towards the red support resistance line, and then we sell it short. We can also buy puts. So buying puts options means that you are expressing your bearish attitude. So right here on 11th of February, you could have bought puts. Let's say it's a good idea to buy them out like a year. So let's say you bought February 2023 puts, if they're even available, but maybe you can do like March or April, or even January 2023 puts are good enough. And you just do nothing and wait. You put your stop above the blue line right there, and you just do nothing and wait. That's a 22% gain today, up to today. So usually you multiply by 3, possibly even 4, depending on how short-term the options are. So easily somewhere in within just 60 to 80% gain you would have already. So that's pretty straightforward in how you think about selling short during a bear market. Now, during the bear market, another way to trade bear market is to have a bear market project. So a bear market project means that you're relatively well off. You don't really care about trading. You just want to be buying on the upside, but you don't know when the bear market will end. Maybe it will continue lower, another 50%. So a bear market project would mean, I don't know, you stay in a deck, or you go on a vacation for until the bear market ends, or you have what's called a bear market project. So that's one, kind of like an inside joke for the traders. If you're interested in making money on the downside, and I am interested in making money on the downside, then you think about bounces and you sell them short. So this is a bounce that happened for GE, and that's when we sell it short right there on February 11th. So again, if you need these indicators, that would just simplify your life so much easier. You can sign up by going to the website in the description. Okay, switching gears to dollar currency index, this DXY. So DXY, dollar currency index, broke out here on July 13th, 2021. Again, I don't know anything about anything. I'm looking at the chart. So once the stock, or in this case, dollar index broke out right there, I would buy it. And I would put the stop at the red line initially, and then I would trail it higher at the blue line. And I would have been super correct. In fact, today or yesterday we made a new high for the move. Euro and the British pound completely unraveled. Are we close to the end of this up move? I don't know. But it is weighing on precious metals. So this is gold, XAU divided by US dollar. So why do I care about dollar? Is because gold divided by US dollar is pulling this currency pair lower. Now, it wasn't a big deal until recently, but for some reason it started to be a big deal. So right now we're kind of in this land where I am a little bit cautious with precious metals. I want to see what happens here, because we did not hold support here at 1923. This is gold, XAU USD. We did not hold support here at 1923 on April 25th, and we broke below it. So I'm not sure what exactly is happening, but as they say, shoot first and ask questions later. So it's better to just kind of get out and stay out for a little while. So that's what we're doing. We're kind of staying out of the gold and precious metals for now, and to see what's happening. I want to see another close above 1923 before we commit again. Now, if we do close above 1923, there's a good chance we can make a new record. There's a good chance. So let's wait and see. And Bitcoin, BTC over USD. So in this case, maybe, I mean, the US dollar here the strength of US dollar may or may not be an issue. I think it's just nature of Bitcoin itself. It's in a bear market currently. Now, I'm not a Bitcoin hater, so these are actual alerts on the upside. We were buying it. I'm just objective realist, I guess. This is a bear market for Bitcoin. Started right there on 5th of January. We sold it 4 times. We sold it 4 times. I think we're going to break down. I think right now we broke through critical support. This is critical support at 38974, the yellow line. 26th of April right there, support was broken. I think we're going to continue lower and possibly take out these lows from January. All right. Head over to MasterChartsTrading.com, click on sign up, and sign up for one of the products. I have 4 different packages. So number 1, trading indicators. These lines on the chart, they simplify your life of trader just tremendously. That's all I use basically. You don't need anything else. We buy and close above the blue line right there. We sell short and close below the red line for commodities, but for stocks we do a little bit different. First we need to confirm bear market, because we give a benefit of a doubt to bulls for stocks. So for stocks we want to wait until the close below the yellow line and then bounce towards the red line and then sell it short there. That's the indicators. They're $29.95 per month, available for TradingView.com. For TradingView.com, you do not need a paid account. You only need a free TradingView account. But once you sign up on my site, send me your user ID for TradingView. I don't need your password either for TradingView.com. Okay, if you want the newsletter, so a newsletter is this. We have Elite and Speculator newsletters. We're going to cover multiple stocks there that we don't cover in the general newsletter. And you get daily alerts and weekly members-only video for this newsletter. Best deal, of course, to get both trading indicators and newsletter at $59.95 per month. I think it's a great deal. If you need one-on-one training, you can sign up for that. 60 minutes of one-on-one screen share via Zoom. I share my screen with you, and we go over exactly what you need to learn, how to trade, how to control your risk, how to psychologically prepare. And that's at $259.95 per month. I think it's a great deal because it also includes both the indicators and the newsletters. All right, that's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching, and have another great trading week. Bye-bye.